What's up, guys? How everyone doing? Last video spoke about some tools of liquidity. So it's inducement. What we stopped last time. So I'm just continue with it. Inducement is just a liquidity close to A or B, close to an OB. Get me? So you see this chart more like an example, It's an algo candle, right? It's an inducement, right? The liquidity, obviously. Get what I mean? Liquidity inducement, right? Algo candle, think so. Algo candle as well. Liquidity inducement, daily cycle. So what happens in a typical day? Asian, London, and New York session. Accumulation, the initial high and low of a day as set. Trap falls out of Asia range. Trap falls, that means more like manipulations in the market. More out of Asian range against a real intended move, right? Trend move, real move form the high of the day, end of the day reversal, close of the day. Asian trap, one of the most important things in the concept of liquidity, especially for inter-trade traders, right? Traders which want to trade mostly on the daily time frames, not like daily time frame, but on the days, like hourly hours, as an inter trader. But most time I just swing, The power cycle can be found on all the time frames with a pattern that repeats, right? The pattern always happens in the market and always repeats itself. And when it repeats itself, you can actually know when it's gonna go. You can see like these patterns, right? It was an accumulation here, right? Break, was a distribution here, right? Asian range to build up liquidity. London price grab, Frankfurt low, PGL. So maybe this low is the low of the day. New York trap on the New York open price create a trap, a fake momentum shift. Will you understand the fake bias? BOS. I explained that the fake BOS on the algo structure part. So the supply zone is just a trap. A lot of smart money kids lose money on the trap. You understand more of the trap, will keep going on this trap, something that you don't know, right? So you can see this here, lower time frame, higher, no, I say high, low of the day is the high of the day. Daily open price, below of the daily open price. So the discount above the daily open price, the premium, build up inducement, trap, shift, low of the day form on the London session. Complete what London wanted to do. You can see an AU trap, then continuation to create the high of the day, right? You see liquidity here. Dollar signs are liquidity, they call them inducement. And that's advanced shares call them inducement. See liquidity here, right? It's like a trap as well. I think the market is going up, but it's not going to go up. And you can see this liquidity, this liquidity I'm taking off. by this price. Okay, these are terms and what ALS Asian low sweep, FFH Frankfurt high. Frankfurt always create a fake move so that the Frankfurt high is just liquidity and the price grab the Frankfurt low liquidity and the Asian low on the London Open. Money entered to the market in the London / New York high related times. 90% of the times London and New York forms the high and the lows of a day. High of a day, low of the day. The high and the low of Asia is a middle liquidity and the middle of Asia is a minor liquidity. After it takes Asia low, price goes in the opposite direction to take the Asia high, right? After it takes the Asian low, price goes in the opposite direction to take the Asian high, right? So we saw that it took price took this low here in the Asian low and was going there to take the high in the Asian, take a high in Asian high, you know. So you can realize that anytime the market takes a low, probably might be going to take a high. That's where you can make your profit if you wanna. But sometimes it doesn't happen all the time. But you have to just find from traps and not from traps, you know. Focus. Once you identify where you are from the cycle, then you can drop down the lower time frame to find a trade setup, right? So dropping down the lower time frame to find a trade setup is because one got a good entry, and a good entry needs a good place where you can actually not have a lot of a high stop loss, no a low stop loss, but then good stop loss, a good entry in a lower time frame, and you can scale it up later on when moving profit. But looking at this, you can see false flag, right? And this is a build up, Frankfurt high, London open. So the 1 minute time frame very clear. Build up liquidity, grab liquidity, right? I want you to see the sweep of Asian high or Asian low, aggressive to the grab or liquidity. So price very aggressive to grab liquidity in the market because no liquidity is where price is being drawn to. So if we start from here, you can see the sign, dollar sign, liquidity grab up here. But we start from the low. Okay, the liquidity down here, liquidity grab up here, down here, went up here, grab some liquidity, created some another liquidity signs, you know, it's a double top, proper liquidity station, right? So some flag movement, there was a false flag, the market grabbing liquidity from the flag, you know, cycle build up aggressive, grabs reverse. So you see, this one is like an accumulation where it builds up liquidity, right? When it builds up liquidity, creates a lower bottom, a double top, you know, you just create some liquidities in this area, you know, and it's a trap the market, trap people in the market to get money off of them, you know, then come up here and take the liquidity up here, come back down again, just keeping the same thing, you know. Case one, I can see this very clearly. I don't know why, but I've tried my best. It's an aggressive chart. Looking at it, it's a build up area, right? Liquidity is here, building up, building up. People put a trade here. The liquidity come and take it down here. Put a trade here, liquidity come and take it, you know. So after taking the low down, it goes up. Take the aggressive liquidity to all this liquidity here. Yeah, called an inducement. So just give us a continuation of a trend, downtrend. On Asian price build-up liquidity, in Frankfurt force moves on the London Open aggressive move. Take all the liquidity and go on the opposite direction. Very simple. Case 2, right? On this case, we have a strong low on Asia. Strong low means the low grab liquidity and break structure. The liquidity and her, we have Asian low grab, a very important liquidity. Previous daily low. So on this situation, the orders enter on an Asian and algo. It will protect this order. Note, this case happens on the reversal or the trend is so strong. Higher time frame reversal or when the trend is so strong. So it happens when the higher time frame or when the trend is so strong. A strong trend is very, very important, honestly, because it gives you a better chance in making more money in the market. Get me? But obviously, risk management is very, very, very important. Higher time frames, direction bearish. Where you don't see a liquidity build up on the lower time frame, go to the higher time frame and find where the price build up liquidity. So where you don't see liquidity build up in the lower time frame, go to the higher time frame, find where liquidity build up liquidity. So vice versa, if you don't see the higher time frame, go to the lower time frame. If you don't see a lower time frame, go to the higher time frame. Check the liquidity. You know. So this is before, right? Liquidity here, but it's been taken out, getting out liquidity up here. Right, we need to be taken out as well. So our liquidity down here needs to be taken out. Right, we're speaking something. Liquidity be taken out here. The inverse up here. Liquidity is going to take out this down here. Case 3. Price build up trap. So this is build up trap. Build up area. It's a trap. Then breaks now and give us a proper aggressive move in the market. Swing high liquidity foul. It's another Frankfurt high. It's another, for example, from up here down here, see this liquidity, the build up area, then give us full liquidity equals to full algo. 90-minute cycle. We start counting from 00 midnight my New York time. Every 90 minutes is a possibility that the price will make a big move. So every 90 minutes we define the opening price to know where is fake move. Higher time frames, liquidity cycle, we have to know that every 3 to 5 days the price changes direction. But why? Because internal bank price delivery algorithm is always looking for data for the last 3 or 5 days, for the last 3 or 5 weeks, or months, or years. And from here to understand that ago is divided into types: long-term ago and short-term ago. Internal bank is one who stores the data for all the places that have liquidity. So we have a weekly cycle. Let's start the weekly cycle. Bullish week, you can see Monday, Tuesday, Wednesday, Thursday, Friday. Monday manipulation moves to grab liquidity. A lot of times the higher or the lower of the week form on Monday, right? Tuesday price accumulate more than continuation. Wednesday reaccumulation, sometimes reverse based on the higher time frame structure. Thursday completes the movement that occur on Wednesday, Friday distribution. Alright guys, I'll stop this video from here. I'll talk about the rest some other time. Take care guys, peace.